Now, that's pre-market. Mike Lee is here in New York City with me. This jobs report seems to me it's just what Wall Street wanted.
Yeah, look, this is a good report. Very far outside of expectations to the upside. The revisions weren't particularly damaging. Remember, all these numbers get revised multiple times. So, I think this is not the main storyline for markets. I mean, you're looking at earnings in Iran.
Yeah, earnings, right? AI, Iran, that's driving this market.
Yes, and so outside of a horrible number or an unbelievably great number, we're not going to drive markets too much.
You're waiting for one stock in particular to break out. I know you are. You're the guy who came on this show a few months ago, or maybe a year ago, I'm not sure, and you said CoreWeave, the greatest possible investment of a lifetime. Well, it was down yesterday. It's down again this morning after their report. When are they going to bounce?
Yeah, look, so just Palantir, when it was at $30, I think is the investment of a lifetime. I still think it is here at 130, 140. But I love CoreWeave. Like, why? What's their business? Essentially, they sell water in the desert, right? Which is a good business model. So they set up data centers specifically for AI to rent out GPUs, NVIDIA GPUs to run their processes on. The stock is down because the street was hoping for a revenue guidance raise for the rest of 2026, but they can't because every single one of their servers is rented out for the entire rest of the year.
Oh, so they couldn't help it.
Yeah, yes. So, but last year they did $5 billion in revenue. Okay, in 2026, by the fourth quarter, they're going to have a $19 billion run rate. By the fourth quarter of 2027, they're going to have a $30 billion run rate. And their cost of capital, because they're taking on a tremendous amount of debt, which is what's really held back the stock to build out all these data centers, to buy all these GPUs, to buy the land, to get the energy. Their cost of capital, their last loan was an A- from the rating agencies, and it's falling rapidly over the years, which means as they have more of these data centers online, a lot of the debt is amortizing, which will get paid off. So the debt load, I don't know that you could say will be decreasing, but the interest expense as a portion of revenue is going to steadily decline over time.
So you have no problem telling me to buy that thing at $119 a share and hold it for a year and I'll do well?
Yeah, look, I think you hold it 18 to 24 months, you could double or triple your money.
We'll leave it right there.
Yes.
Double or triple your money sounds good to me. Thanks very much for joining us, Mike. It's always a pleasure. See you later. Right, now this.